All right, let's get started. I noticed in some of the other sessions, they didn't put that join button up until right at the last minute. So I wanted to give people a few seconds to be able to get into the session. Hello and welcome to Solar 2020 Renewable Energy Vision for the Finance Track session, Clean Energy Financing. My name is Dara Bortman and I live in Philadelphia. And together with my husband, we run a solar installation company. We install and service solar PV, solar water heating, and solar pool heating systems for both residential and commercial customers. And I'm also a relatively new board member of the ASES board of directors, which I joined in January of 2019. I am really excited to be moderating this session today. We have a really wide variety of presentations and presenters here today. We have 6 presenters in all. 3 of the presentations cover different aspects of integrating clean energy onto the grid, from the feasibility and cost of high penetration of clean energy, renewables across a large region of the US today, to a discussion of how we can best integrate EV charging across the grid and use clean energy for the charging and reduce curtailment of EVs, and to a discussion of whether large-scale hydrogen storage is a viable marketable option today. And our 3 other speakers will be talking about federal financing opportunities for solar projects, also residential financing options and new developments there. And then we have a drill down into what's driving consumer interest and buying patterns in the United States today by consumers. So a really wide range of topics. And before I introduce our speakers, let me cover some logistics since we're all new to virtual conferences. There is both a Q&A section and a chat session in this session. So the Q&A is for your questions. Please put your questions in there. And the chat is for shout outs and comments to the moderator and stuff like that. So use the Q&A to submit your questions for the speakers as we go through the talks. We're going to do the six sessions with the speakers all in a row without Q&A, but please enter your questions as we go, as you think of them. And then at the end of all 6 speakers, we will do the Q&A session. And note that submitted questions are visible to only panelists and not to the audience, so don't be worried that your question is disappearing. Once the live session is completed, you can go to the Networking Lounge Networking Lounge chat area for this session, and we can continue the conversation with all of the speakers here. And you can leave this session if you want at any time, explore other sessions, Networking Lounge and exhibit booths, and you can also please sign the Solar 2020 call to action, both for individuals and if you're a representative of an organization, also for your organization, if you're able to, so that we can continue the conversation between organizations past the conference and really make sure that our voices are heard and we transition as quickly and efficiently as possible to clean energy. So now let me introduce our first speaker. Dr. Marc Perez is a senior researcher at Clean Power Research in California. He currently serves on the boards of the American Solar Energy Society, thank you very much, Mark, the International Battery Energy Storage Alliance, and Joint Forces for Solar. He is a trained scientist with 15 years of experience in the solar PV sector and across multiple roles. And he holds a PhD, an MS, and a Master's of Philosophy in Earth and Environmental Engineering from Columbia University in New York, where he was a National Science Foundation Graduate Research Fellow, an Eggleston Doctoral Scholar, and was awarded the Star Fellowship from the Environmental Protection Agency. So, Mark.
Hello, well, thank you for that glowing introduction, Dara. Without further ado, I'll share my screen here in just one moment. And please let me know, please speak up if you can't see the full screen view or something like that, if there's a technical difficulty along the way. So today I'll be talking about pathways to 100% renewables across the MISO region, specifically about firm, cost-optimal power delivery with wind, PV, and storage. So why 100% across MISO? And what is the MISO? The MISO is the Midwestern Independent System Operator. They operate the transmission interconnect across the middle third of the United States, serving roughly 33 million customers. It's pictured left here, stretching from the Great Lakes in the north to the Gulf of Mexico in the south. So why 100%? Well, there's the environmental prerogative, of course. There's the socioeconomic prerogative, which is linked to the environmental prerogative. It helps to set a realistic high watermark for costs when firmly meeting load with high levels of renewables. We've shown that this type of energy transformation can be cost effective across the state of Minnesota, meeting actual loads in the state for the entire state of Minnesota using an optimized capacity expansion and dispatch approach. Well, these same lessons that we learned for the state of Minnesota hold true for the entirety of the MISO region, much larger region. Finally, the solar and wind resource have very different spatial and temporal characteristics across the territory. How does this affect cost? So at left here, this is the MISO region, and this is pictured is the solar PV capacity factor at latitude tilt. Red is a higher capacity factor and blue is a lower capacity factor up in the Great Lakes. And you can see that this is the wind capacity factor. It's quite the opposite. You have much higher wind capacity factors. The wind blows much more strongly in the north than it does in the south. So there's a spatial anti-correlation between the wind and the solar resources. Can these things be leveraged? Finally, what value does an interconnected MISO region, a region of this size and extent, deliver in terms of reduced energy costs relative to smaller subregions subdivided from this territory? Finally, how does a 100% renewable optimized capacity expansion portfolio of different technological solutions change with the cost of these system components over time? So solar and wind, as been mentioned in previous talks, is declining, are both declining very rapidly in terms of cost, and the projections are incredibly low, something like 40 cents per watt turnkey for the entire PV system in 2050. So at those prices, the dynamics change completely. And how does this affect total cost of actually firmly meeting load? PV and wind each have seasonal imbalances which need to be addressed. Pictured at right here on the y-axis is the monthly average gigawatt hours for the load in load resource zone 7, which is this zone in the Michigan oven mitt up here in the northern part of the MISO territory. That's the red curve. You can see it's a summer, largely most of the energy is is demanded in the summer. And if we size solar to exactly meet this, this energy throughout the course of the year, we're gonna have big seasonal imbalances, as can be pictured here. In order to meet load on an energy basis for a year, we need about 66 gigawatts of PV for this region. And we have big seasonal imbalances, summer surpluses and winter shortfalls. Wind, the opposite is true. If we size wind to meet load on an energy basis for an entire year, we need less wind because of the higher wind capacity factor in this region. We only need 36 gigawatts of wind on an energy basis, but we have summer shortfalls and spring and winter surpluses. So it's an anti-correlated resource picture on the seasonal perspective, at least. And because of this seasonal imbalance, it's exceedingly expensive, especially in 2025. This is the cost of meeting load. This is LCOE, levelized cost of electricity on the y-axis. And this is a stacked column. The red portion of the column is the cost of the proportion of the LCOE linked to the storage costs. So you can see the cost is dominated. It's over $1.50 per kilowatt hour for PV alone. It's dominated by storage because we need seasonal storage in this case to mitigate this seasonal imbalance. Wind alone is a bit cheaper. There's a bit less seasonal imbalance. We're at $1.50 per kilowatt hour, but still very expensive. If we optimally combine the two, we can capture some of these seasonal anti-correlations, and we reduce the cost to $1.25 per kilowatt hour. Still way too expensive. But we do save a little bit by combining the two optimally. It's still expensive even using 2050 projected costs, although we do see a 74% reduction moving from 2025 to 2050 costs. Here we're at 40 cents, a little over 40 cents for PV alone, 40 cents per kilowatt hour for wind alone, and 20 cents per kilowatt hour with an optimal combination of both. And this is the cost of firmly meeting load on an hourly basis for the entire year in this particular zone, given the resource characteristics in this zone. So it's about 50% savings with an optimal combination of both. So these long duration imbalances that require so much storage and that's very expensive can be addressed through overbuild. So this is the same picture as before, but we've overbuilt the amount of solar, the yellow curve, and the amount of wind, the blue curve, by roughly 2 to 3x. And you can see there's no more seasonal imbalances that remain. There's no more 30-day periods where the blue curve is below the red curve or the yellow curve is below the red curve. So here we build 2 kilowatts for every 1 kilowatts that we need on an energy basis, and we have no more imbalance at these long timescales, which means that we don't need the storage to mitigate those imbalances. So without any overbuilding at all, we're at 20 cents per kilowatt hour in 2050. With overbuilding and curtailment, we see tremendous savings. You can see the cost decreases exponentially with the amount of curtailment. That's the x-axis here. You see the red portion decreases exponentially, and we get down to 4.4 cents per kilowatt hour. And this is thanks to what we're now calling implicit storage, which is the margin on the renewable capacity that we need. This is the overbuilding margin, essentially. So we're replacing the storage with a little bit of excess renewable capacity, and we can through that method really reduce these long-term imbalances and reduce the cost overall. So it saves roughly 78%. So let's consider a much larger region. That was for zone 7. Let's look at MISO region as a whole. We start off at roughly the same price with no overbuilding and curtailment, 20 cents per kilowatt hour. If we overbuild optimally, we bring the cost down to 3.9 cents per kilowatt hour. So this regional interconnection saves money, at least relative to zone 7, or about 11% cheaper. And you can see that there's a lot more solar than there was in the stacked area plot for zone 7. The yellow portion of this stacked area plot is much larger than it was in the previous one, and the blue is much smaller. And that's because we're starting to capture more of the higher yield zones in the southern part of this region. There's a lot of sun in the southern part. So the MISO interconnect saves roughly $2 billion a year in generation costs relative to the islanding of the LRZ. So there is a benefit to spreading the resource, the generation, and the load across a larger region. We all save money if we work together over a larger region. That's the point of this slide. So let's allow for a little bit of flexibility. Here, we're going to relax the 100% renewable requirement and let us do only 95% renewables with 5% new build gas. And this doesn't need to be gas. It could be any other dispatchable source, just letting it ramp up during low yield periods, low resource yield periods, 5% of the time. We save a little bit right off the bat with no curtailment, and that's because this dispatchable source that's doing 5% of the energy ramps up during these low yield periods, and we save roughly 25% at the outset. We're at 15 cents per kilowatt hour. Then with optimal overbuilding, we bring our cost down to 3.3 cents per kilowatt hour. So this is roughly 15% savings relative to no gas at all. So where gas all not new build, the savings would be greater because we could leverage existing gas assets and just pay for the OPEX and the fuel. So there is potential for leveraging stranded assets, which I know is something on the minds of utilities and regulators across this region at least. So key takeaways: moving from 2025 to 2050, we saved 75% of the cost. It has tremendous, this cost reduction of wind, PV, and storage is going to save tremendous amounts of money. We raised the wind cost relative to the PV cost, and we decreased the optimal wind percentage. We raised the storage cost relative to renewables, and we increased the amount of implicit storage. Confidence and consensus around these costs will help solidify the planning process. Optimizing the amount of wind and PV saves money. It's around 50% savings by optimizing the amount of wind and PV. And that's because of the seasonal anti-correlation of these two resources, at least in this region. We value of implicit storage. This is huge. We save roughly almost 80% by overbuilding. And this is a design choice that is not easy to remunerate in existing market structures, but I think saves a ton of money. The MISO interconnect saved only 11% in this case. So the larger the region generally, the lower the aggregate cost. On the whole, this will save ratepayers billions annually. And finally, relaxing the 100% threshold down to 95% saves about almost 20% in cost. So this doesn't need to be new build gas. It could be hydrogen or some other dispatchable source that fills in the gap there. It could be renewable hydrogen or landfill gas or something like that. So 100% MISO load, 30% wind, 65% solar, 5% gas at 3.5 cents per kilowatt hour. Not too bad. So thank you very much.
Wow, Mark, that's a great presentation. Thank you so much for that. Really interesting. And everyone will be able to see these presentations and the video of these presentations within the next week or week and a half, I think, on the ASES website. So this will all be available for people to see long after this conference as well. Let me introduce our next speaker, Lori Bird. Lori is director of the World Resources Institute U.S. Energy Program and the Polsky Chair for Renewable Energy. In this role, she focuses on decarbonization by the utility sector and large buyers, increasing grid flexibility through market design and transportation electrification. Prior to joining World Resources Institute, she served as a principal analyst in the Markets and Policy Group of the National Renewable Energy Lab, where she specialized in renewable energy policy, solar and wind energy markets, and integrating variable generation into electric grids. She lives in a passive solar home with rooftop PV in Boulder, Colorado, with her husband and 2 children. And I want to give her a shout out because she's also this year's winner of the Leadership in Solar Policy and Market Transformation Award from ASES. And that award ceremony is this evening. So congratulations, Lori, on that. And
thanks so much.
Let's go.
All right, great. Yeah, really appreciate that. So I think my talk follows pretty well from Mark's. That was really interesting, Mark. I'm going to talk more specifically about how to pair electric vehicles and renewables and why we might want to do that. Let me just, before I get into it, let me just give you a little bit of background on the World Resources Institute. I've been there for a little over 1.5 years. Before that, I was at NREL for many years. WRI is a global nonprofit with, it's a pretty large one. We've got about 1,000 employees now scattered across a number of global offices, and we've got our headquarters in DC. WRI has done a lot of work historically with large corporate buyers and utilities and so forth. And one of the projects that we did, this work is from a project we did with a group of utilities and large energy buyers that are, some of them are listed here, looking at new solutions that corporate customers can use to advance their clean energy goals. So with that, I'm going to get into it now. So why do we want to pair electric vehicles with renewables? Because EVs are really only as clean as the electricity used to charge them. They are 2 to 3 times more efficient than conventional internal combustion vehicles, but still, if you're using a dirty grid for them, there's impacts from that. So many customers really want to use renewables for their electric vehicles, and cities and others have set goals around that to make sure to transition to electric transportation, and also to do that with clean energy. And the other point I think that's most closely linked to what Mark was talking about is this can be good for us, for the grid moving forward, right? If we have a grid with more renewables on it, the electric vehicles can be paired with those renewables and timed to utilize some of them to reduce the curtailment, right? So if you have a lot of excess solar energy in the middle of the day, this figure in the bottom right of the slide tries to show some of that you know, you can pair EV charging midday. It matches really well with solar. So that could be workplace charging or something like that. Or you can charge at home at night, which often pairs pretty well with wind. So we did some work here. Really, we just try to do a landscape analysis to understand who's doing what in this space, what are the options open to consumers, and what, you know, try to think through what could evolve to meet both residential customer needs, but also large corporates to meet their goals on clean energy and the transportation side. So, so I'm going to talk about some examples that we were able to find of utility programs or other entities that have rolled out programs to try to pair EVs and renewables. But I think the overall message is that we need more solutions, right? We're pretty early stage in this. So just to give a little bit more background about why this is important, this slide shows, you know, the projections of EV growth over time, right? We just last year reached 1 million EVs in the US, and projections are, that could reach 20 million EVs by 2030. And there was just an exciting announcement by Lyft just recently saying that they're going to try to convert all of their vehicles to electric vehicles by, I believe it's 2030. So we're seeing a lot of momentum in this space. And we've seen quite a few cities and other entities also set aggressive electric transportation goals, but also linking them with clean energy. So the 3 examples listed here are all cities that have indicated they want to move to transportation electrification, but they want to source it with renewables or clean energy. So now I'm going to talk about a few of the types of programs that we have seen emerging. And, I'll say that I think we're in pretty early stages of this, right? Like there's a lot of opportunity for growth and new types of programs and programs that more closely link the timing of the EV charging with the renewables. We're seeing a little bit of that, but not as much as I think we might want to see in the future. So these are sort of the broad categories of some of the types of programs that we looked at. This work is based on a report that we did that's up on our website. I had the link on the earlier slide. So I'm going to talk about a utility offering, a utility network charging program. I'm not going to cover all of these in the presentation in the interest of time. So there'll be some examples in the paper that we won't cover, but I'll also talk about on-site charging and managed charging, which is really one of the ideal solutions for this. So let me start first with one of the utility programs by Great River Energy, which is a cooperative utility in the upper Midwest. So they've done a pilot program in the past that allowed customers to sign up for 100% wind energy and did try to link that with the timing of the excess wind capacity on their system. So they offered a special nighttime rates to switch to this. So it was one of the early programs I think that we've seen from a utility that's trying to encourage EV charging with renewables, but also to try to link it when they have the renewables on the system. So next up, Austin Energy has also done a lot of work in this space and have been maybe one of the most innovative, and they've had programs for a number of years. So they've done a network charging program so that they've got EV chargers across the city that customers can use and can charge with wind energy, through this network model. And they have tried to incorporate some mechanisms to link it to the timing of the wind generation on their system by rolling out rates for some customers that provided benefits when they had for the weekend charging or nighttime charging when they also had some wind generation on their system. But they have different structures of the model in terms of monthly subscriptions for network access to their charging stations and other things. So that's another model that we've seen. Then we've seen a number of entities doing on-site charging with renewables. So installing solar energy co-located with the EV charging stations. And we're seeing more and more of that. And that can be done in sort of simple way, or it can be coupled with storage or through managed charging. But so Google has launched EV charging stations across a variety of their campuses, and they link them with on-site PV. DirecTV's done some of that too. The San Diego Zoo also did this, and they coupled it with a storage system so that customers could, or folks who were visiting the zoo could charge, use the EV charging stations, but if there's no vehicles charging, they could use the solar panels that were on was a canopy parking structure. They would just charge the storage, the battery storage, and then the utility could use that for grid benefits. And we've seen some other more sophisticated managed charging programs. And I think ultimately this is where we really want to get to help to have EVs really meaningfully help us manage the renewables on the grid. As EV penetrations grow and we get more and more renewables on the system, this is really what we want to try to be rolling out so that you can actually control the time of the charging and link it more directly with renewables or when the grid really needs, when it's most optimal for the grid situation. So San Diego Gas and Electric has done, they've done some pilot programs where they offered preferential pricing to the customers to do the managed charging that was at times that was beneficial for their grid. And so in California, this can be particularly helpful for, you know, they already have excess solar generation in the middle of the day. So these kinds of solutions can be quite beneficial for them. There's some other areas of the country that could have significant wind generation at night. And managed charging can help just link the timing of the EV usage more closely to those periods. We also took a quick look at, there wasn't a lot of data, but of the programs that we were able to look at, we tried to understand what was the customer participation in them, how many really wanted the renewable energy option. And as I said, we were really only able to get data on about a handful of programs, but it's about a third of customers that opted for a renewable energy solution when it was available. So the path forward here, I think, or the big picture takeaway is that we're starting to see some of these kinds of programs roll out, but there's many areas where they don't exist. Many utilities don't offer this. And we're starting to see momentum, I think, on EV markets. So it's really timely to be, you know, we need more options. We need utilities to be rolling out options and other independent suppliers to also do that so that customers can have some options. Ideally, you know, I think we want to be trying to do the more sophisticated managed charging programs to the extent that we can, because that's going to provide the greatest grid benefits going forward. And it's not, it's pretty doable in terms of, well, I mean, customers can't always do managed charging. They might need to charge quickly for specific purposes, but often it's a very feasible solution, particularly for workplace charging, where you're going to have your vehicle sitting for long periods of time, or even at home, right? I mean, there's many hours of downtime to be able to manage that charging load. But I think another key issue, and that links to the finance panel, is that, you know, to the extent that customers do a managed charging approach and they charge in a way that is beneficial to the grid, they should also be sharing in some of those savings, right? Reducing the rates that they pay for these kinds of programs is also a really key portion of this. And I think that some of what we saw in the data on participation rates in these kinds of programs is that maybe the customers, there was a high premium and they weren't sharing in the grid benefits that could be offered. So big picture takeaway, I think, is that really we need more solutions in this space. There's a lot of interest in charging EVs with renewables. We need to figure out some solutions that really help the grid over time. So I think I'll stop there.
You already have, it looks like someone actually put a question for you in the chat box, so we can get to that later. But thank you so much, really interesting. And I actually have a question for you as well once we get to the Q&A. Next up, we have Michael Stavy. He, for 31 years, has been a solar energy project finance advisor, or an advisor on renewable energy storage. He has a bachelor's from the University of Illinois, Chicago, an MBA from Northwestern, and he was a CPA at one point, but he said it's inactive now. So his 37 papers include computing the cost of electricity generated at a PV plant. He was quoted on grid reliability in the New York Times back in 2013, and he's taught at Grenoble, at the University of Illinois, Chicago, and at the College of DuPage over quite a long period of time. So Michael actually pre-recorded his presentation, so I am going to share my screen.
Yes, let's see if it works.
It should.
Okay. Did you tell him I pre-recorded it? Because I'm up in the mountains. There I am.
You're up in the mountains, so hopefully you'll be able to do your Q&A just fine. But for now,
okay,
we're gonna do this.
Good afternoon. My name is Michael Stavy, and I am
For the last 30 years, I've been an advisor on renewable energy finance, just like it says on the slide. Wind power, solar energy, energy storage, hydrogen, like my paper here, carbon taxes and credits. I have a Bachelor of Science from the University of Illinois at Chicago, an MBA from the Day program at Northwestern, and I was an Illinois CPA, now I'm inactive. Good afternoon.
Hold on. Why does it not go?
Good afternoon. The question you may ask is why solar PV electricity has to have storage. And the answer is because the sun doesn't always shine when there's a demand for solar electricity. Let's discuss the title of my paper. Is utility scale hydrogen energy storage ready for prime time on the North American grid? A guide for bankers and investors. Other participants in the Solar 2020, of course, can read it, but my focus is on bankers and investors, because what do I mean by prime time? I mean, is it commercially viable today? Today being the June 24th, 2020. And this is a schematic of a hydrogen storage plant, a HSP, that's the abbreviation. Electricity comes from the grid and goes into the charging. And there's a hydrogen electrolyzer, which takes water and breaks it up into hydrogen and oxygen. And then the hydrogen is stored in I call this a tank, it's a generic tank. And then during discharge, when you want to use that solar energy, the tank is discharged and then it goes into a fuel cell, and the fuel cell combines hydrogen and oxygen to make electricity. And then electricity goes back on the North American grid. That's a picture of I think this slide was missed. Hydrogen energy storage is just like a rechargeable battery, like a Tesla wall, a Tesla EV battery, or a Panasonic nickel metal hydride battery. Electricity from the grid charges the hydrogen energy storage plant, in this case converting electricity into hydrogen, and then the hydrogen storage plant stores electricity, and then the hydrogen storage plant discharges by converting the stored hydrogen back into electricity and putting it back on the grid. This is my paper summary. A bulk electric utility scale hydrogen energy storage plant can be used on the North American electric grid for the daily, weekly, or seasonal storage of solar energy. The goal of my paper is to help bankers, investors determine whether hydrogen energy storage is ready for prime time on the North American grid. Here's a factoid for you. The average home uses 1 to 1.5 megawatt hours a month. So that's 1,000 kilowatt hours a month to 1,500 kilowatt hours a month. And right here at the Solar 2020 virtual convention, you can download my paper. I've developed a hydrogen energy storage plant levelized cost of storage financial algorithm from model hydrogen storage plant. To compute the levelized storage cost, my financial algorithm requires 22 hydrogen storage specs or metrics, just like the spec, how many kilowatt hours a Tesla EV can hold. That's a spec, depending on the size of the battery. Okay, 22 hydrogen storage specs, independent variables, and 76 dependent variables are used defining a standard set of SI electric and hydrogen energy my hydrogen energy storage levelized cost algorithm is presented on my Excel worksheet. You can download this worksheet right here at Solar 2020 Virtual Convention. My Excel workbook works. Well, not all workbooks work, but this one does. And in the book, workbook, you can replace the 22 hydrogen storage spec values in my data base case with your own compiled 22 hydrogen storage spec values and compute your own levelized cost of storage. And this is gonna, you can download a fully functioning Excel workbook. Right now, I'm in Georgetown, Colorado, because I was sheltered in place. I came out here originally to go skiing, and then in Colorado and Illinois, there were shelter-in-place orders. And so this affected my paper. I've not updated certain of my 22 spec values in my base case. For example, I used $50.16 a megawatt hour, which is around 5 cents a kilowatt hour, as the cost of the PV electricity, when nowadays modern utility scale PV plants, you can get the electricity, the levelized cost, not what you have to pay for it as a retailer, but we're talking from the point of view of investors on the wholesale market, 4 cents a kilowatt. Oops. And here's another example. I use 3,000 megawatt hours a day is the amount of PV electricity stored each day. A 75 megawatt PV plant with 4 sun hours a day can produce 300 megawatt hours a day. However, a 750 megawatt PV plant can produce 3,000 megawatt hours a day. Those are big numbers. 75 is big. Since I've been in here, this business for 30 years, 75 megawatts is giant when I started. And now 750 megawatts, well, they have them now. The lack of spec value updating will not affect my conclusion. I will update the 22 specs when I get back to Chicago on the next version of this paper. Well, there is no hydrogen energy storage spec database. My goal is not the presentation of a public database of hydrogen storage specs for use by a banker or an investor. I have a much more modest goal of presenting a recognized standard levelized cost methodology, a model hydrogen storage plant, a realistic base case, and an accurate back of the envelope, I call it, levelized cost of storage financial algorithm. Slide 13 is about the hydrogen storage plant, the cycle, and the fact that the unit I use is always it's a megawatt hour of electricity, or which equals a megawatt hour of hydrogen, but this doesn't mean that the hydrogen storage plant is 100% efficient. It just means that if you have a million BTUs of hydrogen, a million BTUs of electricity, they're all equal amounts of energy. These are the details of the standard System International units, electrical and hydrogen energy units. This slide talks about how hydrogen is measured as an industrial gas, how electricity is measured using the SI units, and of course these units can be in volume, such as in nominal cubic meters, or in kilograms of, which is mass. And so I have used the SI unit energy for all energy units in the hydrogen's energy storage plant. Let me point out quickly that since the megawatt hours of electricity are storing the hydrogen storage plant, and since megawatt hours of electricity are discharged from the hydrogen storage plant, I measure the energy that the hydrogen storage plant stores as hydrogen in megawatt hours of hydrogen. Here are my conclusions. If you ask me whether the hydrogen energy is ready for prime time, energy storage is ready for prime time, my answer is no. There are no commercial hydrogen storage plants on the North American grid. I did not find the 22 specs in any authoritative database. I computed the 22 base case specs, but the price was too high. I did sensitivity analysis. In my base case, I was too optimistic on the round trip efficiency for the hydrogen storage plant. It should be in the 50 or even lower range, but I computed it to be 72.9. Oops, I'm running out of time. Please read my paper and use my Excel spreadsheet.
Okay. All right. Thank you, Michael, for your presentation. And
Thank you very much for having me.
we'll have the Q&A
Can you hear me?
afterwards. That's great.
Okay.
Next up, we have Bill Haggy. And Bill Haggy has 45 years. You guys are competing on years here, it seems like. So Michael was 31, now Bill's 45. 45 years of combined experience at United States Department of Agriculture and as a consultant, providing assistance to communities, businesses, nonprofits, tribal governments, towns, cities, and agriculture producers in identifying and accessing available federal programs and resources that support sustainable economic development. Bill, you're up.
Thank you. Can you see my slide presentation? Hello? Hello?
No, we can't see your slide presentation. Did you hit the share screen button at the bottom?
Yes, I'm trying to. One moment.
The green one at the bottom.
Yeah, let's see here.
There you go. Oh,
It's
no.
not, it's not coming up.
Michael, you just shared. You have to unshare. Uh-oh. Michael, you have to unshare. Hold on one second.
I'm sorry. I thought only when I'm talking does it count. Sorry.
Okay, Bill, try it again. Hit that share screen button.
I do not see a share screen button at the bottom.
Are you looking at the Zoom webinar screen where you see all of our faces and boxes?
Hello? Hello?
Yeah.
Oh,
Can you hear us?
I can hear you. Can you hear me?
Yeah.
The screen has went blank on me. Do you see my PowerPoint now?
Nope, but I can share it for you if you'd rather, and
Okay.
you can just keep talking. All right,
Why
hold
don't
on.
we
Let me pull it.
why don't
up.
we do that?
Hold on one second.
Thank you.
You bet. What's the name of yours, Bill?
Federal program supporting solar development.
Got it. All right, hold on one second. I'm going to share my screen.
Thank you.
Okay, can everyone see my screen?
Yes, I can see it.
Great.
Michael Stavy talking.
All right, go ahead, Bill.
Dara, thank you. Can we advance to slide 2? Dara, can you advance to slide 2? Okay. This slide shows you a variety of federal programs that support renewable energy efficiency development, including solar development. I'm going to provide you an overview for each one of these programs today. I'm going to provide you a description of the eligible purposes for the program, any restrictions related to the size of the business, location restrictions, if any, application eligibility for the assistance, funding announcement restrictions, if any, the 2020 funding levels available for each one of these programs. And I provided you a website that you can go to find out the more information on the program after the presentation. Dara, can we go to slide 3, please? Slide 3, please. Hello, slide 3. Hello? Hello?
Yeah, I can't tell which page is which. Is that the REAP, the rural energy?
It's the next one that talks to about REAP, R-E-A-P.
Okay, I've got it up. It might take a second for you to see it.
Okay. Can everyone see it?
I see it.
Okay, under the Rural Energy for America program, this is a program that provides grants and loan guarantees to assist agriculture producers and rural small businesses purchase renewable energy systems, including solar, and make energy efficiency improvements. An ag producer must at least 50% of the income, annual income must be derived from agriculture production to qualify as an ag producer. And a rural small business, a small business is one that meets the definition of SBA has established for that type of business. To give you an example, the manufacturing industry, a small business is an industry that has 500 or less employees. And rural for this program is any unincorporated area and any city or town of 50,000 or less would be an eligible area for this type of assistance. In addition to the grant and loan guarantee program, there is an energy audit and renewable energy development assistance program that provides grants for energy audits, technical assistance, and feasibility studies. The eligible types of entities that can be recipients of this are state and local governments, rural electric co-ops, tribes, public power entities, instrument of state, local, and tribal government, and institutions of higher learning. Under the Rural Energy for a REAP program, the loan guarantee is at $500 million for 2020 available for funding, and the grant is at $21 million. Okay, can we go to the next slide, which would be the B&I?
Can one of you let me know that you're seeing the B&I screen?
I'm seeing it.
Okay, great.
I'm seeing it also.
Thank you. Under the BNI guaranteed loan program, it provides to commercially proven rural small businesses various types of it has various types of purposes, including solar energy, renewable energy, and energy efficiency type improvements to businesses. The again, the SBA definition is provided for a business for this program. The program has $1 billion of loan guarantee program for this year, and an additional $1 billion of loan guarantee under the CARES Act to assist businesses that were impacted by COVID-19, providing them a working capital loans through this period. Next slide, please, which would be the community facility grant loan and loan guarantee slide.
Got it.
Okay. This program provides funding to develop essential community facilities in rural areas. You may ask, what is a rural essential community, essential facility? That's a facility that provides an essential service to a rural area, such as a library, a hospital, a clinic, a fire station, municipal building. Those are examples of what would be considered an essential community facility. Under this program, it's divided into a grant and loan guarantee program, which is a direct loan program, to rural areas that include cities, villages, townships, towns, including federally recognized tribes with no more than 20 residents. And then the guaranteed program under the community facility program, the rural area definition is as follows. It includes areas other than a city or town with a population of greater than 50,000 inhabitants and the urbanized area contiguous and adjacent to it. So the guaranteed program, you have a larger rural area constituency than you do under the grant and loan guarantee program. The funding limits for this program is, for the grant, there is no maximum grant limit, but there's criteria established in the regulations that takes into consideration the population being served, the household income, and where it's in like an opportunity zone, special authorities like that, the agency determines the amount of grant assistance versus the amount of direct loan assistance for the project. The direct loan has no limitations on the size of the direct loan. And the guaranteed loan, there's again no size limitations for the guaranteed loan. Now, you may, who are eligible who are eligible entities or applicants for this program? Public bodies, community-based nonprofit corporations, and federally recognized tribes. There is $2.8 billion of direct loan assistance available this year. There's $30 million of grant assistance available this year. And there's $500 million or $500 million of loan guarantee program of a program available this year. Can we go to the next slide, which would be the Rural Business Development Grant slide?
Got it.
Okay. Again, this is a grant program that provides technical assistance and training to, again, small rural businesses. The definition for this program for small, though, is different than other programs. It means a business that has less than 50 employees and less than 1 million in gross revenue. And the definition of rural area for this program is any unincorporated area in any town or city with a population of less than 50,000. The type of entities that are eligible under this program to receive assistance are towns, communities, state agencies, authorities, nonprofit organizations, rural cooperatives, and institutions of higher learning. And in this year, fiscal year 2020, there's $31 million available. And the maximum grant that can be awarded to one individual applicant is $500,000. Now, can we go to the next slide, which is the Rural Economic Development Loan and Grant Program. Yep. Under the Rural Economic Development Loan and Grant Program, it's a unique program in which the funding is provided to a local utility organization, and the local utility organization again, the project has to be in a rural area. And the definition of rural for this program is areas, unincorporated areas in towns with a population of less than 50,000. There is a loan component to this program and a grant component. The loan program is a zero interest loan made to the local utility, which then in return relends the money to an ultimate recipient for a very low interest rate to do projects like solar business projects, to retain and create employment in rural areas. The grant portion of this program that is awarded to local utilities is used to establish a revolving loan fund. Then the utility uses the funds in this revolving loan fund to relend to various businesses in the areas, including renewable energy related type of businesses, for projects that will create or retain jobs. And they normally charge a very low interest rate. They normally collect the loan through the utility bill to the various party, the business or whoever is receiving the assistance. Funding limits for this program: grants cannot exceed $300,000 to establish a revolving loan fund, and loans cannot exceed $1 million. Now, who's eligible for this program? Former rural utility borrowers, nonprofit utilities that qualify, and current eligible rural electric and telecommunication borrowers. In fiscal year 2020, there's $44 million of loan assistance available and $10 million of grant assistance. Okay, next slide.
Okay.
The Department of Energy's Title 17 Innovative Energy Loan Program. It's for projects with a high technical risk and that employ new or significant improved technologies as compared to commercial technologies. So it's for innovative type of projects that are not proven yet. And this is what this loan guarantee program's purpose is. There is no loan limitation on the size of loan that can be made under this program. To date, there's been $25 billion of loan guarantees provided under this program, and there is plenty of money available for future projects under this program. That is a summary of several federal programs that can provide federal assistance to renewable energy systems and energy efficiency projects. As you can see, there is a wide variety of eligible type of applicants depending on the type of the program. And I'd encourage you to go to the websites that I provided for the respective program you might have an interest in to learn more information about it. And then the next slide is just my company being listed. I'm also a member of the Lee Enterprise Consulting Group, which is the largest bioenergy consulting group in the US. And the last slide provides my contact information if I can be of any assistance to anyone. With that, thank you very much.
Thank you so much, Bill. That was very informative and really surprising how many programs are available at the federal level to help a lot of rural organizations and places go solar, it seems. So I'm sure people will have questions for you about that. Up next is Blake Jones. Blake is a cooperative entrepreneur with 2 decades of experience in the renewable energy industry. He's a co-founder of 4 cooperatives: Namaste Solar, the Clean Energy Credit Union, Amicus Solar Cooperative, and Kachua Impact Fund. Today, he's going to be talking about the Clean Energy Credit Union, which I'm a huge fan of. Blake is a 2010 Ernst & Young Entrepreneur of the Year award recipient and has a bachelor's in civil engineering from Vanderbilt University. Blake, you're up.
Great. Can you hear me all right? Great.
Yes.
So again, my name is Blake Jones. I am a volunteer board member of Clean Energy Credit Union. And you all may be familiar with Clean Energy Credit Union because ASES played a big role in helping to get it started, but it's a new financial institution that aims to help bring down the cost of financing, consumer financing, residential financing, and hopefully eventually also commercial financing for clean energy products and services. Some quick background, which you all are probably already familiar with, but we know that voters across the political spectrum support clean energy and want more clean energy. We also know that consumers are using more clean energy, and demand for all different types of clean energy products and services are growing. However, there's a large upfront cost associated with putting solar panels on your roof, or getting a residential geothermal system, or even an electric vehicle without subsidies costs a little bit more than an economy.
Blake, you just muted yourself somehow. Oh.
Great, am I back on?
Yes, you're back up about 30 seconds in what you were saying.
Oh, great. Sorry about that. I was saying that there's a large upfront cost for most clean energy projects, like a residential geothermal system, or putting solar panels on your roof, or most green home improvements. Same thing with an electric vehicle. Right now, electric vehicles are a bit more expensive than most economy-sized combustion engine vehicles. So there's a big need for financing, especially if we're going to grow the market and make it more accessible to more folks. However, the financing options that are available right now, they're too expensive. There's not enough of them. There's not enough competition. It's still perceived as a new market by a lot of traditional lenders, in particular banks and credit unions, and they perceive the risk associated with these clean energy projects and clean energy products and services to be too high, and therefore the loan terms aren't very good. Also, they tend to, if you go and talk to a bank and say, I want to get a loan to put solar panels on my roof, they're more likely to try to fit you into one of their existing loan products, like a second mortgage, which would encumber the equity in your home and require a lien on your home. So there's not enough options out there. They're too expensive. From another perspective, not everyone can invest in clean energy. If you look at the publicly traded clean energy companies, those stocks are extremely volatile, as is the stock market in general these days. And if you want to invest in a privately held company, one that's not publicly traded, there are significant restrictions on who can invest because of regulatory restrictions and things like that. Lastly, consumers who can't buy clean energy products and services don't have a way to support people who can. So think people who live in a city, they don't need a car, so they're not going to buy an electric vehicle, or they live in an apartment or a high rise and you can't put solar panels on the roof there. There's also clean energy geeks like me. I already drive an electric vehicle. My home's already solar and very green. What else can I do to support others who want to pursue their clean energy projects? So what we did was we took a proven model, which is the credit union model. It's been around for 80, 90 years. There's over 5,000 credit unions in the United States. And we just added an innovative twist to it. And by doing that, we created a new model that we think will benefit the environment, the economy, all the members of the credit union, and Our goal is not to be the only credit union doing this. Our goal is to encourage replication so that we can get all credit unions and banks into the game so that they're helping to support the clean energy movement and bringing down the cost of financing. So quickly, what is a credit union? I didn't know this until we launched this initiative, but credit unions they provide the exact same services as banks do, except they're different in a couple of key ways. One is that they're financial services cooperatives that are not for profit and they're tax exempt. And they're democratically owned by their members, not by shareholders. Our vision as Clean Energy Credit Union, we envision a world where everyone can participate in the clean energy movement. And we help to bring that vision about in two ways. One is we make it easier for everyone to afford to use clean energy by offering fantastic loans with amazing terms that are what we always want to do is provide the best loan terms in the country or among the best. The second thing we do is make it easier for everyone to invest in clean energy. So with as little as $5, you can open a savings account. You can deposit money in Clean Energy Credit Union. It'll be federally insured, just like it would be at Wells Fargo, Bank of America, any of the big banks. And those dollars will only be used to help somebody else get a loan to pursue their clean energy project. So it's a way of doing what's called impact investing or pure play clean energy investing, but it's federally insured, not much risk, and just about anybody can do it with as little as $5. So how is Clean Energy Credit Union unique? What I'm about to share, it's not any one of these things is unique, but it's the combination of these things that makes us unique. So there are 5,000 other credit unions out there, but we're the only one focusing exclusively on clean energy. So our structure being tax exempt and not for profit, we don't have to pay any taxes. We also don't have stockholders that we need to pay. All of those savings we pass through to our borrowers in the form of better loan terms. There's also a cooperative trust factor in that most people don't trust banks. And you insert joke here about recent scandals with Wells Fargo and other big banks that don't always have your best interests in mind. And then we also have federally insured deposits. Next, that exclusive focus on clean energy lending, being in our mission, being in our DNA, this is all we do. So when there are inevitable twists and turns in clean energy markets, new technologies coming out, lots of changes, we're going to be able to adapt to them more quickly because this is all that we're doing. And our board, our staff are made up of clean energy geeks like me and a combination of that with credit union experience. And that's who's comprised of our team. And then lastly, we're what I call a 21st century financial institution. We don't have any branches, no brick and mortar branches. Everything's done online with your mobile phone, over the phone, and not having the overhead associated with brick and mortar branches allows us to pass through those overhead savings in the form of better loan terms as well. Who can join Clean Energy Credit Union? All members of American Solar Energy Society, plus members of their household and family are eligible to join Clean Energy Credit Union, as well as these other organizations that are on the screen. The ones I've highlighted in blue, those are state chapters that are affiliated with ASES, and we're probably going to be adding more ASES state chapters. But anywhere where there's a group of enviro geeks or clean energy geeks, we think those are the types of folks that would want to join Clean Energy Credit Union. And if somebody's not a member of one of these organizations, it's very easy to join ASES. And as you all know, it's very easy to join ASES and then they can join the credit union. So deposit products, in our first 2 years, we got our federal charter in 2017. Over the first 2 years, we've just had savings accounts and clean energy CDs and IRA accounts. Just this summer, in about 1 to 2 months, we're going to be launching checking accounts and debit cards. And then after that, health savings accounts. So those of you who work at clean energy companies, or we'll be approaching labs like NREL and things like that, where you have health savings accounts, you can have them on deposit at Clean Energy Credit Union as well. And then in terms of loan products, we started off with residential solar PV loans, residential geothermal system loans, lots of different types of green home improvements like heat pumps and high efficiency water heaters, high efficiency air conditioning systems, you name it, insulation, even Energy Star rated roof shingles. Also, you can get an auto loan with us, but it's got to be an electric vehicle or a very fuel efficient car. And we're doing a lot of loans for electric bicycles. If you haven't ridden one, they're incredibly fun. And, but they are a little bit more expensive oftentimes than regular bicycles. And then phase 2, starting next year, we're hoping to have credit cards and get into mortgages. So the mortgages will have a clean energy theme. It'll need to be a net zero energy home or an Energy Star rated home or a LEED certified home, but very efficient home. And then we also want to get into business lending too. So providing business lending services to companies that are in clean energy industries, but also helping office buildings and nonprofits, churches, schools to do green improvements as well. So we've made a lot of progress. We're approaching our 2,500 loans. We've done over 2,000 loans. We're getting close to 2,500 in just the last 2 years. And the number of loan applications is growing. Even during this COVID crisis, the number of loan applications continues to grow for us. We get a lot of questions saying, hey, how can I help to support clean energy trading and getting off the ground and getting over that startup hump? Please, if you haven't already, become a member. Make a deposit. Even just depositing $5 really helps us because we're getting loan applications at a faster rate than we're able to get deposits. If you're doing a green home improvement project, or you've got an electric vehicle and you're considering refinancing your loan because interest rates have gone down, please consider applying for a clean energy loan with us. And then also just helping to spread the word with your customers, your friends, your colleagues. We'd really appreciate it. Becoming a member is very easy. If you go to our website, cleanenergycu.org, there's a join button. Applying for a loan is similarly simple. Just go to cleanenergycu.org and click the apply button. And one last thing that I'll say about what we're doing is we have worked now with 24 other credit unions in teaching them how to do clean energy lending. They've been very curious about what we're doing. Like I mentioned earlier, that our goal is not to be the only ones doing this. So we've taught 24 other credit unions about our clean energy lending program, how to do our clean energy loans. We're going to continue doing that because if we can get more banks and credit unions to provide loans for clean energy projects, it's going to help bring down the cost of financing and the overall cost of clean energy projects. Thank you very much.
Thank you so much, Blake. That was really, really informative. As I said before you spoke, I am a huge fan of the Clean Energy Credit Union. I have an account there, I have deposits there, and many of our customers are now using your financing to finance their solar energy systems. And I just found out that they can finance their solar pool heaters too, not just PV. So that's great. I haven't found any other financing organization that would finance a solar pool heater, at least not easily. So that was great. Thank you so much. And we have one more awesome speaker today, Sarah Gutterman. Sarah is the co-founder and CEO of Green Builder Media, the leading media company in North America focused on green building and sustainable living. Sarah has established a reputation for herself as a visionary thought leader and passionate advocate for sustainability, developing long-term green strategies that have a profound market impact and are simultaneously sustainable and profitable. She is also, Sarah, sorry, I missed a sentence. Prior to founding Green Builder Media, Sarah was a venture capitalist involved in the life cycle of over 20 companies. She's also a county commissioner in Hinsdale County, Colorado. Awesome. Where she's an avid runner, hiker, snowboarder, and CrossFit trainer. Sarah, you're up. We can't hear you.
She's muted.
You're muted, Sarah. Can you unmute yourself?
All right, how's that? Can you hear me now?
There you go. And you're able to share your slides yourself?
Yes, so can you see my screen now?
I can. Do you want to make it to this, change it to the slide presentation so we don't see your menu options?
I can see it on, what can you see? Because I can see my PowerPoint.
Yeah, it looks like a PowerPoint, but if you hit that little, I think it's the like one of the middle icons at the top of your screen, it'll basically allow your presentation to fill the whole screen. So it doesn't look like PowerPoint anymore. It looks like a slide presentation. Go to slideshow in your menu there. If you go over home, insert, design, transitions, see slideshow in the menu. In your PowerPoint menu.
Yeah, so I can open it into the full slideshow in my, like I can see it on my screen, but apparently it's not translating to your screens.
That's okay then. We can see your PowerPoint, so I think it'll be fine.
All right. Yeah, I apologize. I'm not sure.
If it doesn't work, I'll let you know when you try to change the screen.
Okay. Okay, well, I'll dive into it, and then if there's a problem, please do let me know. So today I'm going to share some market data that Green Builder Media has been harvesting. I'll explain how we harvest and gather that data that will show market trends that are driving solar adoption. For those of you who are not familiar with Green Builder Media, we are the nation's leading media company focused on green building and sustainable living. We have a full and robust spectrum of online, mobile, digital, social, and print media and communications channels. We do demonstration projects that we call our Vision House series. We do live events, although given the world these days, ours will most likely become virtual as well. And then last but not least, we have a really neat suite of market intelligence and data services that we call Cognition Smart Data. We've built a proprietary artificial intelligence-based technology platform that mines web and social media content using contextual filters and parameters that we have taught to this platform so that the data that we glean is hyper-focused on the built environment. And so it's different from other data or social listening tools because it's laser focused on topics like net zero and renewable energy and healthy home and connected living and things that we want to focus it on. And again, it's just super relevant to track things like consumer sentiment and purchase patterns and innovations that are driving market transformation and other very specific things that we want to track. So that we can see, just do a deep dive into market influencers. We're also able to then combine in our vertical kind of deep dive data that we have on our audience. We reach a hybrid trade and consumer audience, so about 200,000 of the most progressive building professionals across the U.S. and millions of early adopter and first mover consumers. And we've got years and years of engagement data, psychographic, demographic, profile data on our audience, so what they like, what they read, how they engage with us, how they respond to surveys and calls to action. And so when we put those two data sets together, as you can imagine, we get a really comprehensive perspective on the marketplace. So the data that I'm going to present to you today comes from Cognition Smart Data, as well as Green Builder Media surveys. As you can imagine,
sorry to interrupt. We're still just seeing PowerPoint and the first slide, like the header. Are we supposed to be seeing other ones, or is it not working?
Yeah, I've been moving through.
Okay.
Dara, we may need to.
Why don't you unshare and I'll try and share my screen.
Okay.
Okay.
Hang on, let me try this one more time.
I'll just share mine.
Okay, so I have unshared mine. Are you able to take control now?
Yeah, give me a second here.
Okay.
No, wait, hold on. Oh, yes, let's see. Okay, now tell me which screen, which page I should be on.
You know what? Actually, just go to the next one. I had changed the version that I was showing, but we'll stick with the one that you have. So just go to the second slide, and the timing will be perfect.
This one, impacts of coronavirus on housing sector?
Yes.
Okay, great.
And Dara, I don't actually see that slide. I see the menu view with just the first slide again.
Hold on. Let me try that again. Oh no, I just.
Click
Just
on
you need to make
enable.
enable editing.
Yeah.
I need to what? Say that again, Ahmad?
Enable editing from the PPT itself, and then you can start the slideshow.
Okay. See if this will work. Can you see it now?
Perfect. Thank you.
All right, wonderful, thanks. So as I was saying, as you can imagine, we are really keeping our finger on the pulse with respect to how changing consumer demands are going to place new expectations on the building industry and specifically the housing sector. And so we've been furiously gathering data. We've been doing all kinds of consumer and building professional surveys. In this particular survey question, we asked our builder and building professional audience what they thought the most impacted segments of the housing industry are going to be moving forward based on changing consumer questions and expectations and demands that they're already starting to see. As you can see, the majority of respondents, at about 36%, told us that they believe that health and wellness and indoor air quality is going to be the most impacted segment of the housing sector, but I think that goes for across the building industry into commercial and other kinds of industrial and et cetera. I think that just as with the 2008 recession, that in some ways was the best thing that could have happened to energy efficiency because everybody became really cognizant of their energy bills. I think similarly with this pandemic and this recession, we are seeing a heavy emphasis on health and wellness, and we're never going to go backwards from there. But the next response, resiliency and self-sufficiency, is the reason why I wanted, not quite yet. So the next response on this chart is resiliency and self-sufficiency, and that's very pertinent to the solar industry, specifically because when people think today about resiliency and self-sufficiency, the quickest and kind of most exploding topic within that area is on-site energy storage and production, so solar plus storage. And when we start seeing about 30% of consumers really shifting their expectations with respect to things like health and wellness, resiliency, self-sufficiency, connected living, what that means to us is that the industry is really ripe for innovation. We think that we're going to start seeing new approaches to building, design, construction, product specification, certainly with respect to solar plus storage and on-site energy production, whether that's on a single-family level or community level, community solar, with microgrids and certainly demand-side energy management programs. But we certainly believe that we're going to continue to see a surge in demand for on-site energy production and storage, and then connecting that into connected living technologies. Next slide, please. What we're also seeing that, I'm going to take a little bit of a circuitous route, but it translates directly to opportunities in solar and renewable energy. We're seeing a direct correlation between coronavirus and increased demand for climate action. Now, this started in the very beginning of the pandemic when NASA sent satellite images of pollution levels in Wuhan this year versus last year. And now we're seeing images from cities across the globe, cities in India that haven't seen the night sky in 30 years or haven't seen the stars in 30 years. Pictures from LA that see rows of mountains that are normally covered in thick, choking smog. And so as people, especially that live in densely populated, polluted urban areas, see what clean air and fresh water looks like, we're actually seeing an increased demand online for climate action. Next slide, please. And this is important because consumers before the pandemic were already making choices to reduce their ecological footprint, to reduce their personal carbon emissions. This is actually a consumer survey that Green Builder Media conducted right before the pandemic in January, early February timeframe. And as you can see, the majority of consumers responded that they are feeling the impacts of climate change, and mostly that was in the form of extreme weather, flooding, wildfires, et cetera, but also that they were changing their behavior accordingly. So reducing food waste and plastic use, reducing water use, driving less, eating less meat. Next slide, please. And again, the reason why this becomes important for the building industry and specifically the housing sector is that we're seeing consumers play an increasingly important role in product specification for their homes. Now, let me give you a little context for this. 15 years ago, when we started Green Builder Media, we started surveying our readers and asking them how often consumers were helping in specifying products for their homes. And at that time, we were primarily B2B, so it was mostly building professional responses. And at that time, 15 years ago, they said maybe 10% of the time. And that was mostly in categories like plumbing fixtures and appliances, maybe flooring and tile. Every year for the past 15 years that we have asked this question, that number has gone up. And now that we reach a hybrid trade and consumer audience, we're able to get feedback from both audience segments. And across the board, trade and consumer, they tell us that our audience members, and keep in mind, these are early adopters and first movers, they are progressives, but they tell us that consumers are participating in product specification and purchasing up to 70% of the time. And the key here for the solar industry is that the range of segments and categories that consumers are getting involved with has broadened tremendously. So they're actually getting involved in specifying solar, PVs, and battery storage systems, and windows and insulation and roofing systems, all the way down to the specific brand and model that they want. And as we're seeing enhanced engagement with consumers on that level, what we're also seeing is as consumers' education level increases, we're seeing also a simultaneous increase in the willingness to invest more upfront in things like solar and storage and building products that will enhance building performance and connected living technologies. And so this is really interesting because for those of us who have been in this sector for a long, long time, beating the drum for decades saying that lowest upfront cost and price per square foot is not an accurate metric for measuring the value of our homes and buildings, all of a sudden we're starting to see that a shift in the way that we value our homes and buildings, and certain people moving away from that lowest upfront cost metric and price per square foot metric to something that actually incorporates sustainability, quality, renewable energy, and the value of that on-site solar plus storage, energy production, monitoring, and streamlined usage. Next slide, please. And along with this, we are seeing this massive transition to net zero. So, global market demand.
60-second heads up, one more minute, because I want to leave a few minutes for Q&A at the end.
Okay, global market demand for net zero is exploding. We're seeing major innovations. In fact, Blake mentioned some of these technologies from solar to heat pump water heaters, mini split HVAC systems, et cetera. Next slide, please. And we're seeing growth irrespective of location, climate, political jurisdiction. In fact, in the US and Canada, the number of net zero homes is growing by about 60% on average year after year. And within that net zero context, we're seeing a surge in things like community microgrids, a transition to total electrification and then a movement towards net zero carbon. Next slide, please. And then, with respect to the solar market, we're seeing a simultaneous increase in demand across the board, residential, commercial, industrial, et cetera, utility scale. And I think that's partly because, the cost, well, actually, I'm going to skip through some of this just because of time. But I think suffice to say, what I'd like to say is that the solar industry is maturing, right? It's not a nascent industry anymore. It's become a mature market where there's consolidation of upstream PV companies, and we're starting to see a growth in energy services, in the storage and demand-side energy management side. I think that, like Blake was saying, creative financing solutions are going to continue to be essential in growing this market. Next slide, please. And then just a couple of last things. And how much time do I have? Am I out?
None.
Okay, darn. Okay, let me take two. So interestingly, as we track audience demand for solar, the boomers talk a lot about solar, but the millennials actually indicate the highest purchase intent for solar. Next slide. And this is really important because it's the millennials and the older Zoomers that are going to be continuing to drive demand for housing, right? They're looking for changes in their living situation. They're looking for more space. They're looking for more self-sufficiency. Next slide. And, interestingly, they believe that net metering is a badge of honor. It's something that they talk about with their friends. They're doing it for the right reasons, to reduce their carbon footprint and decrease their energy bills and increase their self-sufficiency. And I think I will stop there. Thank you.
Awesome. That was great. And I will tell you that I also think that the younger generations are going to start buying their houses because the roof faces south, and it's going to be a good solar house. So I think that that's going to start determining what houses that people actually buy right from the start. We've pretty much gone till the end of our time. We have 2 or 3 minutes left. Bennett, do you want to just throw out 1 or 2 quick questions for folks, and then everyone can continue the conversation in the sessions chat room throughout the conference with all of our speakers. They'll all be going back and forth into the chat room, so if you have questions, you can continue the conversation there. Bennett, what questions do we have?
Looking through, a lot of them have kind of been answered and tackled throughout. The most recent one right now is from Debbie, who says, are you asking, measuring about the importance or desire of passive solar features, windows focused on the south side?
Who's that for? Can you repeat that?
I would assume it's for our last presentation, since it was submitted at 3:42.
Okay. Sarah, did you get that?
You know what? It got a little garbled in there. So can you, Bennett, I'm sorry, can you repeat it?
Sure. Debbie asks, are you asking / measuring about importance / desire for passive solar features, windows focused on the south side, I assume, for example?
Yes, we are measuring for that. I don't have the data right at my fingertips. You can feel free to email me and I can provide you with more information. We have full reports at greenbuildermedia.com. You can go to our Cognition microsite, and we have like net zero reports that provide more information. And what I will say, though, is certainly the interest in passive solar is a thread of the net zero topic area that we're tracking, and it's growing along with the rest of the segment.
Bennett, another one?
Thank you. As far as our Q&A box is concerned, we're all out there, and it looks like the other speakers have done a great job answering questions in chat as this has progressed. So I don't have anything else to ask at the moment.
That's awesome. We have about 1 minute left. Let me see. I had a question for Lori way back, but I think I'll put that in the chat room so we can continue the chat there. Guys, all of your presentations were really informative. Thank you so much for participating. Thank you to all of our members and registrants for the conference that have been listening in. I hope you enjoyed it, and please continue the conversation back out in the chat room. And now you can go out to the exhibit hall and join us for the award ceremony coming up in a little bit. Thanks so much, everybody. Really great session. Really enjoyed it.
Thank you, Dara.
Thank you.